Is insurance gonna still be profitable and affordable for people?
That is a very difficult question, and I think the industry is struggling with it.
What is changing fast in insurance and what is not?
Most of the time, we've been buying it the same way our parents purchased it. When you do it right, insurance is incredibly comfortable, and you don't have to change. And it's very, very difficult to create an insurance company. You need vast sums of money, you need a lot of resources, and if you get anything wrong, it's very costly.
That's absolutely crazy.
That's why we don't see a lot of new insurance companies pop up.
What's the biggest challenge you face with your podcast?
The biggest challenge with the podcast is...
It's back in my days when I was a financial advisor, I used to sell insurance, but that was a long time ago. About 8 years, 9 years ago. Damn, this goes fast. So talk to me about insurance. What is insurance to begin with?
Well, I mean, the definition of what insurance does is a complex one, but I'm a bit of a contrarian when I define insurance.
Perfect.
Most people think of it as security and a way to indemnify someone. And yes, that's what it does. But I look at insurance as a hedge against a large amount of capital. Essentially, what you're doing is you're paying a fee to access capital when you need it in the event that a agreed upon peril has happened to your property, and you can then claim against that capital to build out your loss.
So with that being said, I think we can say that risk is going up everywhere.
Absolutely.
Uncertainty, raw materials, interest rates, like natural catastrophes, or however we say in English, that's natural disasters, that's it.
Yeah.
Is insurance gonna still be profitable and affordable for people? Because I guess you can always be profitable if you just bump up the prices. But then there is a point where, hey, you cannot afford insurance. So what's the future of insurance?
I love how you get into the meat of this, Guillaume, because this is this is the $64,000 question, the $1 million question.
Right.
Or in the case of insurance, the $1 billion question. First, before I answer it directly, insurance is the only industry where you can sell less and make more money. Because the more you sell, the more exposure you have. And if you don't model out that exposure, and this is property insurance, obviously. I mean, it can be the same with other vehicles in the life and benefit side. But the more you sell, the more exposure you take. So if you model that wrong, you're going to have extreme losses and make way less money as opposed to insuring the only stuff that has no losses and always making money. So will insurance always be profitable? As you said, yeah, it will. You can keep raising rates, you can sell less of it, and you can only insure the people who never cost you money. But will insurance always be affordable? That is a very difficult question. And I think the industry at large is struggling with it. No matter where you are on the planet right now, there is an existential threat vector that we're all grappling with. And whether you believe in it, the causes or whatever, it's here. And it's causing frequency. It's happening at greater frequency. It's happening with more severity. And is happening in unpredictable ways and places. And that is climate, and it is driving the root of insurance problems. And we now have places in this planet on Earth that are uninsurable, that we cannot, that insurance companies don't want to actually be in because they sustain too much loss. We're in a very complex situation. And I think you brought up interest rates. And one of the other things I know is that there are billions of dollars sitting on the sidelines that have traditionally been reemployed in insurance that aren't there right now because there are safer ways to make a return on your money, which is usually what people want to do, make a safe return.
I love this. So with that being said, the way I love to see insurance and think about insurance, it's a bet against yourself. Like I'm betting that something's going to happen to me. And when that does, I want to have some form of return on investment. So I'm going to pay on the eventuality that something is going to happen to me. And I guess the insurance is your friend, right? Because the insurance hopes nothing's going to happen to you. Otherwise, they're going to pay.
Yeah.
But let's deep dive into this a bit because that's something I've always wanted to talk with somebody who knows the field. What do insurance companies typically do with those deposits? Because if they run their business properly, they should have an excess of cash. But they can also not just spend it all because otherwise they cannot repay somebody coming up with an issue. That's very basic, but that's the vision.
But that's the basic premise of it.
So what do you typically do with this money? And what do you do now? Like, how does it all happen?
Let me qualify something. I've never worked for an insurance company, but I work in insurance. So what insurance companies traditionally do, and my role in insurance is property and casualty. I'm not a life person, but the same things are there. First of all, insurance is a heavily regulated industry. The essential point is that you could really set up an insurance company quite easily, take a bunch of money and run off with it, because you're not delivering a product, you're delivering a guarantee and a promise. So insurers are very regulated. And one of the things that they have to do is basically prove to regulators that they can actually pay out claims when they happen, given the amount of risks they've taken on. So in this case, an insurance company holds a reserve of cash, and then it also buys reinsurance, and it pays for all its operations out of the premiums. Let me take a little segment. We live in a hyper capitalist society at large. We want to make money. Profit is good. I believe in profit. I'm an enterpriser. I want to create things, build things, make the world go around, provide opportunity, and make a few dollars in between, right? Insurance is the ultimate socialist tool. The concept of insurance is the premiums of the many pay for the losses of the few. It is socialism at its core entity. And there's nothing wrong with that. In fact, it's one of the true socialist industries that is capitalist in nature, in that you have to rate, you have to grow, you have to innovate, you have to do things, and it will take care of itself with strong and appropriate regulation. So, when it comes to the premiums and what insurance companies do, they run a thing called a core. And a core is their combined operating ratio. And that what it means is expenses plus losses equals against the premiums is where they run. So if you're hitting at 100, every dollar you take in, you have an expense for it. So you want to get your core below 100 and you can make money. Now, the other thing with insurance companies, right, is they take these premiums, millions, billions of dollars, and also invest them. Having $1 million sitting in cash is kind of a waste of time. Having $100 million sitting in cash, doing nothing is a bit of a waste of time too. You want a return on that. So they put those monies into very safe investments and such too, because that helps drive up their core, meaning their income. So if you had $100 million, you made 5% on it, you had an extra $5 million. Now you're operating with $105 million. Simple math. I don't like math. I'm not very good at math. So I try to make numbers easy. So that's what they try to do. They also buy reinsurance, and reinsurance makes up a portion of their pool of capital. So reinsurers act as insurance for insurance companies. So if you don't want to have to liquidate X amount of dollars, you can buy reinsurance for many different ways. And there's a whole other class of insurance, reinsurance brokers and such, that essentially what they help do is help insurance companies model out how much they need to cover their regulatory requirements, charge a fee for that. That fee gets put into the premium down to the consumer who buys the insurance, depending on cost of it. And reinsurance happens in many ways. It can be on a risk class basis. If an insurance company writes a whole bunch of companies that make widgets, they will buy reinsurance for this huge volume of companies that make widgets. They could buy individually, which is faculty.
Wait a second. You lost me.
Yeah.
What's a widget?
What's a widget? A widget's a figurative thing. It's a North American thing. A widget is just something that doesn't exist. It's an example of a thing like, so you make a widget. What's a widget? It's nothing. It doesn't exist, but an example of something that's there. So I just use this as an example without picking on an industry.
Okay.
That's what they do. And so that's kind of the really simplified way of how insurance works from a standpoint of the trickle up. You pay $1,000, €1,000, or whatever it is.
Yeah.
This is sort of how it goes in a simplified sense. Hopefully 10,000 other people pay the same amount. It all goes into a pool. It pays people's salaries. It pays for losses. It pays operating costs. There's a few dollars at the end. Someone makes some money, and then the rest is invested. It helps buy reinsurance. And then that flows seamlessly down to when people have a loss. That's the idea.
I'd just like to get back on one thing that you mentioned. Insurance is the paramount of socialism.
Yeah.
If that was true, then those with greater means would pay more. My understanding of insurance is that those with a higher risk pay more. Am I correct on that assumption? Or?
Yes. Okay. So you're right. In a true sense, everyone would pay the same because it would be a social benefit to everyone to have equal payments and equal access to the losses. But then the model falls apart. part because there is some math involved in this, right? Again, I stopped math in secondary school and never went there, but I ended up in insurance. So go figure. But the whole idea is I have a 20-year-old son who's in business school doing calculus and everything. And I said, I kind of wish I'd learned a little bit for what he's learning. However, the math has to say a certain amount of risk costs more. So then you move away from the socialist idea of everything and it gets into the capitalist idea. If you have $1 million house, should your insurance premium be the same as someone who has a $100,000 house? Well, there's reasons to say yes and no. And that all comes down to the details because someone with a $100,000 house could be sitting on the banks of a river that floods every other year and they're always making claims. So therefore they have a higher risk factor where the $1 million house could be in a nice secure area built out of fire resistant materials and blah, blah, blah. So its chances for loss are less, but when a loss happens is more severe because hence there's $1 million to cover. So there's all those little factors in there inside the math that change everything. Again, I'm not an actuary. I just play one on podcast.
And I love this. So let's talk about your podcast. Talk to me about the insurance podcast, which is pretty straightforward. I guess it's mainly in the title.
Yeah, it's about insurance. So Guillaume, what we do is we sit and talk about insurance with people in the insurance industry, mainly property and casualty, although we do dive into some of the newer interesting things on the life and accident benefit side. But I'm an old school property and casualty insurance broker. That was my career and decided I want to talk about it some more. And that's what we do. So we sort of look for people who are in, to want to talk about insurance. It's not for people who don't really work in insurance. I don't know if you could make a podcast about insurance regularly that was interesting to consumers, people who buy insurance. If you're trying to learn how to buy insurance, I think you could do 5 episodes and then you'd be done. But we try to say the insurance industry, no one talks about it. And insurance, it's not a passion purchase. And as I like to say, no one in the history of time has ever woke up on a Saturday morning, sun's coming in the window, and just stretched up and went, oh, do I feel like buying insurance today? It's never happened. Even insurance people don't like buying insurance. So we just try to talk about it so people in the industry can kind of have an idea of what's going on. What's new, what's exciting, what is interesting to them, and get a view of all the different things happening in this industry. Because believe it or not, as boring as insurance is, changing really quickly. And that's a good thing, but it's also hard to keep up with. And, there's lots of stuff to talk about. We seem to have no shortage of people who want to talk about insurance, surprisingly enough.
I'll add a bit of flavor to this. I think there is a type of people who can and sometimes are fascinated by insurance. And here I talk about the data nerds. I have a friend who used to be the big French insurance company. And now he's a consultant at a big consulting firm. But the amount of data, variables, predictability, stats that is involved in working in insurance. So back to the thing that, maybe if you're just a consumer, talking about insurance is not your favorite topic. If you're in data, in stats, it's sometimes a bit gory, but it's also so interesting to talk about insurance and to see the data and the data and the stats and how to propose the best insurance policy, how to position yourself. It's for those people, it's fascinating. For the normal Guillaume or moms and pop shop, it's less interesting. But it can be fascinating. I see how it can be fascinating for people who like this kind of stuff.
If you think about insurance, Guillaume, and sorry to cut you off.
No.
Most of the time, we've been buying it the same way our parents purchased it, particularly in North America. And, the consumer experience on so many other things that they use every day or, once a week or frequently is evolved so far. And the insurance is slowly catching up. Things don't move slow in insurance. They move at a glacial pace, but that's changing. And so just like the metaphor of life here is going to be climate change, or the metaphor of everything, just like our climate, glaciers are starting to move a lot faster with insurance right now. And it's same in insurance. Oh, geez. There's going to be this testing me guy. He's going to be so he wants to talk about his climate. I really don't mean to.
Man, I love it. But so wait a second, Pete, because you told me, hey, it's changing all the time. So it's hard to keep pace and keep up with it. But now you tell me it's moving at the pace of a glacier. So which one is it? Like, what is changing fast in insurance and what is not? Like, is it people who don't change fast in insurance, but the actual things to take into account and consideration? Like, what is it?
This is a complicated answer. Companies don't have a lot of reason to change because the ones that are really good incumbents who have been around for a long time, they've got the math, they've got the data, and they've got the customers. So they know what their churn ratio is, the amount of people who are basically going to turn over year in terms of shopping their insurance around, depending on whatever class, auto, home, commercial, farm, agriculture, and all the other ones in between. But they are really good at figuring out how to not get too far into risk where they're going to have problems. So therefore, they're always in their comfort zone. And when you do it right, insurance is incredibly comfortable and you don't have to change. So, and it's very, very difficult to create an insurance company. It's hugely capital intensive. You need vast sums of money. You burn through it at an incredibly quick, fast rate. You need a lot of resources. And if you get anything wrong, it's very costly. That's why we don't see a lot of new insurance companies pop up. They do, but they run into challenges. And I think, and again, there's very much a difference between Europe and North America and Asia, the three sort of hotbeds of economy and everything. Africa has its own challenges. South America has its own challenges. But for most cases, we have the European economy, we have the North American economy, and then we have the Asian economy, which are essentially all of these ones that add up together are sort of the westernized economies, even though I'm talking about Asia. Where there's opportunity for change to happen is places where insurance has traditionally been fragmented. So emerging economies have a lot more opportunity because they have a need for it. And there's growth there and everything's changing. But so for my neck of the woods, which is North America, you don't see a lot of new things pop up because it is a very difficult industry to get right. You do see a lot of auxiliary or ancillary entities that come up, and they may be, incumbent companies may buy them and offer sort of roll out a different division under their own umbrella and stuff. But you don't see companies starting things too often because they don't need to. I mean, so when something like a lemonade rolls out, it shakes everything up. There's two types of people in this world. There's people who drink lemonade and there's people who won't touch it. And that's with this insurance. There's a lot of people who love that company and a lot of people who don't have a lot of great things to say about it and its model. But again, it's a very well-known brand that came up in the insurtech evolution that's recently happened since about the mid-2010s. And it's made a lot of noise, some good, some bad. And, they are trying to scale up. They're trying to find a profitable model. They're trying to find a way of distribution that works, and they're trying to find a service model. And they're not always doing everything successfully because it's really difficult. I don't fault them for trying. We need entities to try. It just takes a long time to get it right.
What are the common things between hockey and insurance, Pete? I'm asking this because I know you're an aficionado of hockey. Are you insured when you play hockey, by the way? Because I heard it's a pretty violent sport.
Yeah. Well, so yes, you can get insurance. I actually have helped insure a hockey player before. That was an interesting process because it's really not my wheelhouse, right? It's not my insurance, but you do for injuries and such. I mean, just like great athletes, right? Like you think of all the great tennis players, they had their arms insured and stuff like that, right? Like, and Martina Navratilova famously had an incredible policy with Lloyd's of London on her arms. So you can do it. No, so with hockey, do you insure? So hockey teams have insurance. It's quite incredible to insure a sports team. And one of the most famous, so during the pandemic, one of the biggest claims paid out in the pandemic was Wimbledon, the tennis tournament, had a policy that had an infectious disease clause, meaning that if a pandemic happened and people weren't able to attend, they could claim on it. And they did. It was over 100 million euros, I believe.
That is crazy. It had some people who are visionaries.
Yeah. So they went and had a look at what would prevent this tournament from happening. And you can delay it because of weather. You can do this. but they need attendees. So if no one could come, what would prevent people from coming?
Oh,
Pandemic is one,
man.
infectious disease. And so they were covered. I mean, I doubt we'll ever get that policy again, like, because
for sure.
right, like
Never
there it
gonna
is.
fly.
But there were a number of teams, NHL teams, who are like the hockey league in North America, who are in a lawsuit right now because they were denied coverage under an infectious disease clause in their policy. And the insurance company was disputing the wording and some of the nuances of whether it was actually covered by the conditions of the pandemic. And so there's a lawsuit with about 7 or 8 teams who had a particular, I won't name the insurer, but I did do a podcast with the large broker who did it. And I was blown away by what this is before the pandemic happened, I think. I can't remember, maybe right after, I can't remember. And hearing about this, but we didn't talk about it on air. We talked about offer. So I can't even talk about it for fear. I don't want to get sued, but yeah, very interesting. And and that's part of it, right? Insurance, is it's so specifically written about in the conditions of what triggers a peril, what constitutes a peril, and what can trigger a claim and the conditions with which it happened.
I'm trying to find the lawsuit details. Is it, so I see Calgary Flames launched $125 million lawsuit against insurer over massive COVID losses. Will there be the name of the insurance? I don't think they are mentioned. Man, that's crazy. That's absolutely crazy. I love it. Speaking of things I love, the name of your company, Pete. So it's written Taycon risk. So pronounced Taycon risk.
Taycon risk.
Naming it. Tell me a bit about this company. So what do you do exactly?
So Taycon risk is, we're categorized as an MGA. And an MGA is essentially the letter abbreviation for managing general agent. And MGAs typically live in the gray zone. We're not an insurance company, but we're not an insurance broker agent, although agent is in our title. What it is we manage general insurance capacity as agents for insurance companies to help brokers. So an insurance broker typically, if it's just a smaller size broker or agency, wherever you exist, you may only have a few contracts with insurance companies because insurance companies like to deal with volume, meaning they want you to write a lot of business with them. So if you have more companies, you got to grow more. So maybe you don't want to do that, or maybe you can't get to that thing, but you need capacity and expertise to underwrite a risk that's in your neighborhood or your city where you are, or a referral, but you don't have a company that can do it. You go to an MGA, you don't need a contract. You typically don't need to give volume commitments. You say, hey, I've got this company that makes widgets and we want to insure it. Can you help us out? And so we take that application, all the underwriting details, and we look at it and go, yes, we can. And we will place it with this company who we have a contract with. And we'll issue the policy, charge a fee, and the insurance company gives us a small percentage of it. So we play in a volume basis. We don't deal with consumers, although some MGAs do. We don't. Typically, MGAs are not direct to consumer. We want to live. My personal belief is that we should, if we're serving the industry, we should serve those in the industry, not the consumers they're trying to conserve. But there's a lot of gray zone in there because of regulatory things. So that's what we do. And so we take on risk for people and help them place it. Interesting enough, no one really understands the origins of that name. So I'll confess it here. So my business partner and podcast partner, Kurt, those are the actual first parts of his 2 kids' names, Taylor and Connor. So we put them together,
really?
Taycon. I thought it was a fun way to do it.
So it didn't even come from the fact of saying, hey, you should take on risk, which is directly linked with insurance. It's actually from okay, so next question then. What was the name of your partner?
Kurt.
Did Curtis name his son after the intention of putting something together at some point with which would make Taycon risk?
Yeah. Yeah.
100%. Curtis, I want you on that. Oh, man, I love it. So
that was good. It was a good one. My kids wouldn't work because it would. Their names are Jay and Liam. So somehow we came up with jail. No, that's not going to work.
Jail risk. Well, that would make sense. Probably not for an insurance company, an MGA.
Yeah.
But love it.
Go to jail? I don't know.
Hopefully not. What's the link with the podcast? How do the podcast and the company link together, if any, Pete? But are there some things that...
Guillaume, it's kind of a funny story. So Curtis and I have been friends now for about, 2024? Coming up close to probably about 17 years. And we both worked in the same industry as insurance brokers. And without knowing it, we both sold our brokerages within 3 months of each other. And we kind of joke, if we just sat and talked about what we were thinking, we probably could have merged and just kept going on and having a lot more fun, but we didn't. And I don't look back with any sort of, oh, whoops, that was a mistake. We just should have just chatted. So I was kind of sitting there and we're both kind of sitting in limbo land. We have non-compete clauses. We can't do anything. And this is sort of this funny thing where a friend of mine who used to manage radio stations. He worked for a large broadcasting company and he was laid off. So he goes all in on podcasting and he starts one up and he has a thing called the Sound Off podcast. It's the podcast for broadcast. And he talks to radio people and stuff and he helps manage podcasts. He does all these different things. And Matt says to me one day, he's like, you got nothing going on. Why don't you start a podcast about insurance? I looked at him. I said, who the heck wants to talk about insurance? He goes, insurance people. So I started looking around and there were definitely podcasts about things. They were very specific and things. And there's a couple good ones. There's a lot of good ones, actually. I really enjoy some of the ones out there. And so I just kind of went and looked up through my contacts in the industry and said, hey, I'm starting a podcast. Would you want to be a guest and talk about insurance? Most of the people thought I was crazy. I said, no, we're going to do this. And started recording conversations like this. And there we go. It sort of just took off from there. Next thing you know, someone wanted to sponsor it. I got asked to come and talk at conferences and do some things. And it sort of took its own life. Eventually got headhunted and came back into the industry in a different role, working for someone else and had fun. And then by a chance, Kurt and I were recording a podcast and we stopped recording and we talked to the guests for a while. We ended up talking for like an hour and a half, longer than the recording. And sure enough, the guest says to us, you know what? You guys aren't media people. You're just a couple insurance guys. What are you doing? He goes, we've got expansion plans. If you guys want a contract, go start an MGA and I'll give you a contract. And so we got off the call with him and Kurt goes, I think we're going to start an MGA. I'm like, no. and so he kind of took it on. So I was working for someone else and I sort of said, okay, you do the first little bit of legwork. If this makes sense, I'll start paying a lot more attention. So some things fell into place. We kind of sorted it out and eventually we had the Shell and Lloyd's of London contract and we're like, okay, I guess we're doing this. And through just some fortuitous events, a couple things changed where I was working and there's a really nice opportunity for an exit point where no one was going to be harmed too much. And I sort of found a way out and we've been at this sort of full time since last fall. And, the MGA's sort of been operating a certain way. We have an underwriter. We've just hired another person. We have a CFO who sort of works part-time for us that way, who comes in and does all the financial stuff and helps us sort of keep our lack of numerical skills reverting us. And, we're in that accelerated growth phase now, working with clients all over. We have a really neat cryptocurrency mining program that we're working with another carrier with. So for people who mine Bitcoins and everything and do all the calculations with their mining operations, with all the servers and everything, and the Bitcoin miners, as they're called, we do a specialized program with someone for that, which is a lot of fun. I'm learning more and more about energy consumption metrics than I ever thought. As I say, the further I try to stay out of math, I keep finding my way into it.
Maybe it's your
my grade 12 math teacher could ever see this, God rest his soul, he's no longer with us. But if he saw me right now dealing in this industry, I think he'd probably have a stroke. It would just blow his mind. Are you serious, Tessier? I saw what you got in your last 5 exam.
Man, that's an amazing story. So you start the show a bit out of, hey, somebody recommending you to start a podcast about insurance because they are in this world and you're like quoting yourself, not doing anything at that time. Yeah. And then out of just a guest that you were networking with and chit-chatting with after the recording, you start a whole new business that would have, safe to say, probably not existed if it wasn't for the podcast and the interaction that you had?
Yeah, I think so. I think that moment, like, Kurt was he had a different sort of non-compete clause than I did in terms of what it was. And he knew he was sort of nearing he could sort of see the finish line on that. And he was sort of itching to get back into something. He'd been sort of talking ideas. He wasn't sure what it was. But as you said, the podcast, this fortuitous interview and sort of friendship that came out of it really kind of launched Taycon Risk. And it's neat. Like, thank you. I always say, one of the things about insurance I loved and why I started a podcast was I was sort of sitting there, I had some money in the bank. I was doing a little bit of some very loose consulting work, but I was kind of just twiddling my thumbs. I was too young to not do anything. Don't let my hair give me away. I needed something to stay connected to the industry because the industry had been very good to me. It had been very forgiving. It had been very welcoming, and I'd formed some amazing friendships. I think the part that most people, particularly the public and anyone in other industries, wouldn't understand about insurance is the people in this industry tend to be the best I've ever worked with in terms of all the industries and different career vectors I've had. There's a core thing, I think, with successful people in insurance tend to want to care about others' outcomes. And if you care about doing something good and helping others, you will be very successful in insurance if you always put the needs of others first and try to make the best outcome happen. And that means it's a people business. It sounds like a numbers business, but it's really a people business. And, the people in this industry are just amazing. I'm really lucky, Guillaume. I get to travel with it. I go to a lot of different conferences, conventions. I've spoken at many of them. I've interviewed CEOs, senior executives, startups, founders, you name it. And everyone is just, I come away saying, I think I may have a new friend. And, you have these connections, and I know people in Florida, California, Arizona, Dubai, Singapore, London for sure, and even a few in Germany, some in Denmark, across Canada, the United States, you name it. And it's incredible. And to think you've got this sort of professional network that because of a podcast, it's the best thing ever. And I get to, I know if I had to go to Singapore with my wife for some reason, I could call up a couple of people and say, hey, I'm actually going to be here as a tourist. Would you like to get together and have a drink or go for dinner? They'd be absolutely, Pete. So glad to meet you in person. And, here we are sitting here 7 time zones away from each other and stuff. And I would love to do the same for you. If you ever came to Canada, I'd want to meet you in person, right? Like, this is the connections of stuff. And, that's what's so beautiful. And I think the pandemic really changed a lot of things, and it made people really want to connect more once we had the chance. And insurance is no different. And it's been an incredibly wonderful opportunity to meet all these people who just generally care.
Thank you on that. If I come to Canada, you're going to receive an email from me, and we're going to have to meet for a pint.
Absolutely. We can do it. We can take you on a classic Canadian adventure out to the lake, fishing, show you all the wildlife. I had a bear walk into my cottage backyard the other day, and
I'm going to need an insurance for that.
Oh yeah. Well, here's the thing. If you have a cottage out in woods and stuff, actually there's an exclusion. You have to buy extra coverage for damage by bears.
Oh, really? And I love it. Good thing is it can be protected. It's just at an extra premium.
Yeah, it's extra premium. Guillaume, there's no bad risk. There's only bad premium.
Exactly. Is that the punchline that goes around in the insurance world?
Well, that's what some people say. But to get a premium to cover that stuff is pretty outrageous. That's for sure.
Makes total sense. Pete, what's the biggest challenge you face with your podcast? We've talked about all the benefits.
Oh yeah,
literally business, networking, friends.
The biggest challenge with the podcast is trying to keep it engaging, because even for insurance, we can get really into the weeds on some things that isn't always that interesting to get the good stuff out. And so a lot of times, most of our recordings, they tend to go to about an hour because we're trying to unearth some nuggets. And then it comes down to, hey, we've got to piece this all together again. And we're finding that, it's a time thing. So having another business, finding time to do the podcast, edit it, I could hire an editor, but because the subject matter is so specific, and if you don't understand what people are saying, you could really edit it the wrong way. So we do it ourselves. But that's the hardest part, is making a recording relevant and entertaining enough on a relatively dry subject matter, even though it's interesting to us. That's the biggest one. And then growth. You always want to grow. I don't care about growth for a monetary aspect as much as I care about it to just spread the word and to sort of see what we can create. How interesting and influential can we make this, not for our own benefit, but because that's just the challenge. It's not a vanity thing. It's more of a, what can we do? Because I'm an enterpriser. I want to see what I can build.
100%. It's absolutely loved it. There is one question that I ask all my guests at the end of the episode. What podcast do you listen to that you would recommend to me and our audience? And of course, disclaimer, you cannot say the insurance podcast, but do not worry. The links will be in the show notes. But 3 podcasts that you listen to yourself. What would you recommend to listen?
The podcast I've been listening to a lot right now is Smartless. And do you know that one? Nope. Smartless is with Jason Bateman, Will Arnett, and Sean. I can't remember Sean's last name. He was on the sitcom Will and Grace, and it's a ton of fun. I also listen to a lot of local podcasts around different sports and stuff too. So certain things around sports teams. So the hockey team in my neck of the woods is the Winnipeg Jets, and I also follow the Vancouver Canucks because I grew up in Vancouver. So I listen to podcasts around those 2 teams. I also listen to one called Hawk Blogger, which is around NFL football that I really like because I grew up in Vancouver. So the Seattle Seahawks are my sports team. I also listen to a Crystal Palace soccer or football, European football podcast.
Good.
As well, because my dad is from England. And don't hold that against me, Guillaume. But my family grew up in South London and for generations, and they have always been Crystal Palace supporters. So Palace is my team, and happy to see a lot of Palace players being represented for the upcoming European Cup, Euro 2024 Cup, and crossing my fingers for some good things to happen. Not because people should cheer for England, but you should just have some sympathy for them because they think they're the best in the world and they can never win a bloody thing. So I know that's a hard one to swallow, but great Jean-Philippe Mateta, who is a reservist for France, and Michael Olise as well, who just got called up. Great Palace player. So I listen to a lot of sports ones. I have a weird thing about podcasts and such. I try not to listen to the ones doing the same kind of content as me. And the reason is I don't want to feel like I never want to think to myself, did I just steal someone else's idea in the same industry? Like, we pay homage to whatever. Like, I'm the big believer that there's really not a lot of original ideas left in the world anymore. We're just sort of recycling ones we've forgotten about and repurposing ones that, and things like that. But when it comes to the insurance industry, there's some great podcasts out there. I really love Bradley Flowers and the Insurance Guys. And they've got a niche and they're good at it. And I never want to think, oh, I'm kind of stealing a little bit of what they do to help me get better. So I don't want to be influenced by them, but I love seeing what they say on social media. I love seeing who their guests are. And we have had crossover guests that we didn't ever plan on. But those are ones I really know they exist. I kind of keep aware of them, but I don't listen to them because I just don't want to inadvertently rip them off for some reason, because that would make me feel bad. I'd rather rip off a great idea from some other podcast that has nothing to do with ours and say, hey, this is happening over here. One of the ones with Smartless that I really like is you know who the guest is by the nature of the podcast, who it is, but they sort of almost pretend like they don't know, and they kind of read things about the guests and their business or who they are, and then kind of make the other host guess who the guest is. And maybe it's a shtick and stuff, but they're just fun. And they poke a lot of fun at each other too. And they're good, they're actors, they're celebrities. They're very good on their feet talking about things, but it really is, it's fun. And sometimes you need something that's just a little light and some brevity in this world, because man, it's not a light world to live in right now. And so sometimes having something fun is just a great way to distract yourself from the problems that we all face every day.
Amen to that. So, Pete, I'm very sorry. I didn't know about Crystal Palace. I'm not a huge football fan nor follower, so that explains. I just know 3 clubs out of the UK. But hey, nice to discover it. And I see they are 10th in the rankings, so it's not too bad. And if anything, because I've watched a couple of times around the beer, obviously lots of friends like to do that, some matches. And the ones that I find the most interesting, because the pace is so fast and the plays are so good, is, how do you even call the league in the UK? Premier League matches are the ones that I would rather watch if I had to choose. So, hey, there is at least this.
There we go.
Pete, thank you so much for coming on Podcast Gurus. It was great to have you.
Yeah, well, thanks for asking, and absolute pleasure. And I look forward to, following along and adding another one in where I can learn from other podcasters, hopefully not steal their great ideas.
Hopefully, and looking forward to that beer and bear in Canada then. Cheers, Pete.
Cheers.